Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon Yellow Tunnel. And today we're going to have a live trading room open to trade stock and options using our technology. Before we begin, let me know if you guys can hear me and see my screen. We'll begin shortly after. Phil, Bill, Michael, sounds good. Thank you, sir. Michael. All right, Sir Mark. Very good. Sir Michael, sir, we have a lot of sirs today. Okay, good. How's everybody feeling? All right, let's see. Need this, I need this, need this, need this. That's about it. Discord. All right, let's start. Feels good. I need a good market day. Too many bad days. Okay, today is going to be a good market day. Let's get a good market day. All depends on the definition of good. It's kind of a relative term, but okay. We'll do our best. All right, let's see. Nice. Share your screen. Okay. All right. Okay, we can start. Thank you for waiting. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel, and today we're going to have live trading room open to trade stock and options. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. This is my brief bio. Disclosures are very important. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level. Before making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal past performance, and you can see the relationship between Tradespoon and trading block on the bottom of the screen. All right. Let's go over the market. We'll skip the psychology part today. But again, I don't want to skip it. Very important. We're still trading in a volatile, not maybe not very volatile. VIX is under 20, but at least was a lot of uncertainty, right? Bull, bear, soft landing, no landing, mild recession, no recession. The narrative changes as market, as the tape changes. So it's important to still have a view in terms of risk management. And risk management is a routine, right? It has to be a process. And every day the process repeats. I try to simplify it. For me, I would say on average you have only 4 positions and you risk no more than 2.5%, right? No more than 2.5% per position. How do you determine 2.5% per position? You look at spiders, right? So you type in spiders, let's say. So, I mean, Meta had pretty good earnings, right? Up 15%. Microsoft had pretty good earnings, up, what was it, 10%. JP Morgan had good earnings, continues to rally. LA Lilly had good. So let's say you're in a bullish camp, right? And you think market pull back to 50-day moving average, to this downtrend line. This is usually a good support, right? This is usually at least a good support for continuation, right? If you think that the bull market will continue, right? So something like this, right? Completely possible, right? So let's say you want to buy it at 406, right? Because you think that the market can at least retest February highs, right? Or year-to-date highs. Okay, then what is your stop loss? Right. Well, right now I would say right below 50-day moving average. Right. You have a strong support around 400, 402. 50-day moving average. This breakout of the downtrend line. So right below that, if we're trading here, right, then I would, below this line, I would exit the positions. Right, and then the second level would be March, December lows. So if you're a short-term aggressive trader, you want to buy the market at 406 because you think Meta hit a home run, GDP is still positive, and initial claims actually went down, right? And there is more room to the upside. April usually one of the best months, and 50-day moving average usually holds, right? 70% of the time holds. So then you buy Tommy Lee, BIBI, welcome. Say hello, Block Zero. Hi, everyone. On Discord. Not sure why that happens. I guess shy. But do say please hello on Discord inside of the chat. But welcome. I'm glad you guys are joining. So the size, right? It's a trader's market. In the past 2 years, the market didn't go anywhere. So you have to have a clear, defined entry and exit strategy. Why do you need to have an exit strategy? If anything, just to determine the size, because position size. Because if you don't know what your stop loss, then how do you know how many shares to buy? So you have S1, S2, and you have resistance 1, right? Resistance, I would say 410, right? We spent a couple of weeks at 410. So let's call 410 resistance 1 and resistance 2, right? So what is the size? So if the stop loss is 400, and let's say you buy, as soon as the market opens at 404, right? Then how many shares do you buy? So your stop loss, let's call it 10 points, right? Right below 400, maybe 10 points. Maybe for this, I'll put 10 points. Right below that line, so we can do easy calculations. So 10 points is your stop level on stop 1. Stop 2, if you buy at 407, let's say you get out at 377, that's 40 points, right? So if you're thinking about weeks and months, right, 2 to 4 weeks, 1 or 2 months, you have 40 points on the downside, right, if you're bullish. And if you're thinking about, hours, days, then 10 points. And again, average account is, well, if you're doing day trading, your stop loss is 400. We can be there, by end of the day. Market volatility is picking up, so you need to have $25,000 account minimum. So I propose not to risk more than, it should be, usually it's less than 1%, anywhere from 0.5% to 1% if you're doing day trading. So if you're short-term trading, 25 shares, right? And again, market is volatile, so it's been kind of trading to the downside, maybe by 15 shares now, and if we do reach 50-day moving average, which is going to be around 402, then you add another 10 shares. If you're not comfortable doing day trading, because we could be there, Amazon, right? We have Amazon today, we have Google, not Google, but Apple next week. Volatility can pick up, right? So far, mega cap technology has been solid, right? No big negative, no negative surprise. A lot of cut, still positive revenue growth, right? But Facebook is actually plus 3%. Everybody expected negative growth. They actually were able to get a couple percentage point positive. So it could be volatile. So 40 points, right? 40 points, that would be, obviously, you can't do 25 shares. So you can do maybe, 6 shares, right? 240, 6 shares. So this is how you determine the size, right? So risk management is about number of position and position size. And you always trade the same number of shares, right? So if you always trade 25 shares, you always do day trading, okay, you buy 25 shares times 400, what is it, $10,000? Well, $10,000 roughly, right? So you always, if you're doing short-term trading, it's always $10,000. If you're doing long-term trading, okay, you divide it by 4, so, okay, you always trade $2,000, right? So it's always $2,000 long-term trading on $10,000 account. It's always, $10,000 if you're doing day trading, right? And you have $25,000 in your account. And if you're doing options, same thing, right? 100 shares on spiders, $40,000. So then you can do 100. You can do one contract on spiders. Maybe you can do an option spread where you're risking $250. That you can do, but then you don't buy single calls or single puts because you're over leveraged, right? Or you have to look for tighter stop losses. So that's very important, right? So I encourage you to always review your stop losses and target gains. All right, it's 8:31. Market just opened. I did not do. We have to look. I didn't do the earnings, right? But these are some of the stocks that I did in my own personal account. So Meta hit a home run, up 14%. Let's watch Meta. I do have out of the money calls. So I have to watch Meta. Now, down 5%, eBay up 4%, Teledoc up 8%, Roku down 5%, LUV down 5%, and Comcast is up 4%. So let's watch Meta. So calls, you can actually, if you did the out of the money calls, you can close it and break even or makes a little money. I don't know if you guys have any questions in terms of key support resistance levels, Meta. We'll go over other earnings. Just want to watch Meta for now. All right. So Roku, out of the money calls, you can close now. Out of the money calls, you can close. Okay, so Comcast. 50. You can close Comcast, out of the money calls. Okay. Let's look at LUV. LUV continues to deteriorate. 28. Let's look at LUV. Continues to drop. All right, Meta is at 239. All right, let's go over the questions. Let's see. Good morning, Fred, Bob, Faust, Irene. Am I still an LLY? LLY did have earnings. They were up pre-market. I do have, yeah, it continues to rally. So I do have LLY, right? I closed half of the position. and I did leave the second half. The question was Eli Lilly. So just announced earnings. They were better than expected. Let's see, LLY. All right, so I closed one half, look for 1% gain. The other half right now it's trading at 393. So I have 402 to exit at 402. It got close to 402. Got close to 402. So for now I'm holding Eli Lilly. Bob, SMH is lagging. There is a lot of significance, right? It's sitting at what is it, March low? Let's see, what is it sitting? It broke April low, right? Right, it broke April low, and it's retesting March lows, right? It's retesting March lows. And semiconductors, it's kind of operating system of the economy, right? You can't really go very far without semiconductors. So, I mean, we still have Intel and AMD, but Texas Instruments and a lot of them announced earnings. It's a sign that we are trading in the bear market, right? This is the main argument is that bears have, right? Is that semiconductors kind of rally. I mean, it is have a low multiple, but it had a huge rally, right? It has this A, B, C. We're probably trading in D, right? We're probably trading D or A, B, C, right? So we're trading in wave C, right? You can basically say. So personally, I think there's a lot of significance, right? And I think the passive list resistance is to the downside, right? So I think there will be retest, and it will probably happen, well, it's not going to happen in, May, but somewhere during summer, right? Somewhere Q3. So, I don't know, end of Q2, June, June, July, just depends on market conditions. But this is a sign of weakness. And same thing with IWM. IWM are really not going anywhere, right down. And value stocks in general, if you look at the value stocks, anything but the, your technology names, value has, oil has pulled down significantly. So this is a pretty bearish price pattern, right? Pretty bearish price pattern. I mean, 1 week, I guess, is not enough. We'll see if the next week there is a follow-through. But I think, this rally, October rally is over, right? We're going to consolidation, and at some point, the pullback is going to accelerate. It's already accelerating in crude oil, small caps, semiconductors, et cetera, et cetera. All right. Thanks, Bill. Why is ALGM? I mean, just because you have positive earnings, it doesn't mean that the stock is going to go higher, right? So I didn't analyze ALGM. I wasn't listening on the call, but I assume, I mean, it had a pretty strong rally, right? And they just didn't hit the home run. You have to, I mean, they're up 100%, right, from their lows. So when the stock is up 100%, it has to deliver good earnings across the board, bottom line, top line, and forward-looking guidance. So maybe they deliver good earnings. I don't know. I know nothing about the LGM, but I'm making an assumption that the forward-looking guidance is not strong, right? Eli Lilly, there was no, it's a home run, right? They hit a home run, so they've been rewarded, right? Meta, I mean, I don't know if it's about a home run, but better than expected, much better than expected, and they're going up, right? So that's would be the idea. All right, let me close my LUV. Okay, so let's see, Comcast. So I'm watching Meta, right? Those short calls, out of the money calls. I have two 250 short calls, which I need to get rid of. And it's 8:45, right? First 15 minutes, ideally you want to close in first 15 minutes. Let's see how spiders are doing. Let's look at QQQ and spiders. Okay, so QQQ is up 1%. Spiders kind of up 0.5%, so that's good. QQQ, let's look at 1 hour chart. Okay, so nice gap, pulling back slightly. All right, how's Comcast doing? So LOV kind of down 6%. They have a lot of issues internally, and software issues, and then, a lot of flights were canceled in the past year. It's a lot of that publicity. Comcast is at 38. Okay. eBay. Let's close eBay. I don't need to worry about that. Okay. All right, and let's see how's Meta doing. Meta is up 14%, continue to stay strong. Okay. All right, let's review the rest of the positions. Okay. So we're talking about spiders. Immediately, I would watch, let's see, stock forecast toolbox. Model turned negative, right? So the top, I think, is set, right? We had a pretty major pullback all the way to 50-day moving average. You can see earnings is 50% of the companies already, announced earnings. Bottom line, I think the cost structure, the cost reduction has been awarded. Artificial intelligence has been awarded. Good earnings has been awarded, but the bar is set low, right? And I think one of the message I'm getting is that companies like Meta got rewarded. They're up 15%, but they grew only 3%, right? So people expect that there will be a turnaround by the end of the year, and Meta is going to start growing 10-20%. And this 25%, force being laid off it's going to be difficult, right? It's going to be difficult. And next quarter, like when we were in July, and Meta announces in July, people are going to pay attention less to how many people they laid off and how much money they're saving. They're going to pay more attention to their revenue, right? Right now, the bar was set low, negative revenue growth, and they delivered, 3% revenue growth. So, and I think that's the message going to across at least mega cap technology stocks. So, and you can see even companies like JP Morgan that I think delivered really strong earnings. No signs of recession, no signs of slowdown. And you can see it's already trading below the gap, right? So it's slowly closing the gap, and it hit the home run. So you can see not a lot of appetite for risk taking. Not Meta. Let's go Microsoft. How's Softy doing today? Microsoft is trying to, but unable to, for now, no follow through, right? It's been at 300 as soon as it, first hour after it announced earnings. So it's unable to have a follow through, and it's sitting kind of on this major August high, right? A little bit higher than August high. So I think the message is that there's not a lot of appetite for risk taking, right? Not a lot of appetite for risk taking. And I think we'll see next week. I mean, Apple announces earnings next week. We still have Amazon. But, if we do have a follow through and we make new lows next week, then we're heading lower. And I think the top, we might revisit the top. We might revisit 417. I think there's very low probability we'll revisit 430, right? I think very low probability. Something has to happen in the market internals, in the data, to push it to 430. Some unknown, right? But assuming there's no new kind of a, black swan event, and you don't have like big surprises in inflation data or big surprises in, Fed meeting next week, I think 430 is off the table for now, at least for a while. I don't think we're going to get to here. We might revisit, earnings is not over, still 50% of S&P 500. We might, 50-day moving average usually holds, right? And if it holds, we might revisit 420. But I think the top is set, right? I think the top is set. Right, we're still going through this consolidation, and we might do that for the next couple of weeks, but I doubt a lot of people are going to want to have a lot of bullish positions going into June. I think that's the message. So use opportunities to reduce your longs. Maybe it's time to consider, adding to your shorts. All right. Any questions? Caterpillar, same thing. Like Caterpillar hit a home run, right? Better than expected, top line, bottom line, and and it's down, right? Why is it down? I mean, most likely it's because, again, market sentiment, right? Nobody wants to take risk, and everybody's hiding in technology. So if technology company announces good earnings, like Meta, Microsoft, okay, they get rewarded, at least for now. But anything outside of technology, whether it's a bank or energy, right? Why is energy down? Right? When China is reopening, right? And everybody, on all the earnings call, they're attributing, who was attributing to China? I think Caterpillar, I forgot some company, but crude oil, despite the OPEC cuts and blah 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 blah, China reopening, and it's going the other way, right? It doesn't make sense. The only reasonable explanation that I can find is that more and more people believe that we are either in recession or we will enter a recession. I mean, during recession, banks don't grow, industrial companies don't grow. I mean, nothing grows, right? So in theory, even technology, you see a pullback in semiconductors, probably, it's just a matter of time, Microsoft, Google, to follow through. Because Meta, at 3% revenue growth, shouldn't be at the multiple, whatever the multiple they have right now, right? 15, 20, right? When companies don't grow, multiple 2, right? Multiple 5, right? General Motors, Ford, Meta, still has a pretty relatively high multiple. Okay, so, That's Bob. Thank you. Tech earnings surprise. I get a D for not following system. I get a D for not following system and predicting ahead of time. I'm not. I mean, Bob, I do encourage you to keep a journal. I encourage you to grade. The only way I grade myself C or D if I violated my rules, right? I either have too many positions or position size was too big. That usually the only way I would grade myself C or D. Trying to predict earnings, technology earnings, I would never grade myself C or D because you just can't, right? It just depends on the sentiment. It depends on, you know, how much coffee you had this morning. You know, you just cannot predict them, right? You cannot predict. And we've seen this examples, right? Wise Caterpillar down on great earnings, Meta single-digit growth, laid off 25% of their workforce. You know, ad spend continues to deteriorate, and they get rewarded 15%. It doesn't make sense, right? There is no kind of logical explanation except that that's the sentiment. This is where people are hiding their money, right? Indexes. People are hiding money in QQQs, right? You know, Meta is a big part of QQQ, so they get rewarded, right? Industrials, you know, kind of the opposite effect, right? Industrials, if you're part of industrials, you know, and UPS announces earnings, right, and they're dismal, right, worst earnings, I don't know, what, 20 years or something along those lines, then you see indiscriminate sell-off in transportation. Keep in mind these big names, they're part of some kind of indexes, right, or some kind of assets, right? And when XLI sells off, and when the transportation sells off, it pulls all the constituents, right? They might have great earnings, but if everybody's selling, you know, XLI and UPS is a big part of XLI, well, you know, then you have this kind of effects where you have a sharp pullbacks. Okay, any questions? All right, let's do Meta. Okay. So looks like LUV bouncing back. Yay. A little bit concerned for a little bit, but it's bouncing back. Again, short put. I mean, it's a small loss. You did do short put, but it is bouncing back nicely. Actually, can break even. At 28.5 put, so I'm gonna break even on it and close it. Definitely don't want to have short position. Long position, you can take a little risk. You know, if you're shorting stock, you know, if you're going long, I would, you know, trim on these pullbacks. Okay. Meta holding on to its gains, so that's good. Eli Lilly is up 3%. That's good. Amazon continues to rally. A lot of expectations to Amazon, right? So for some reason, everybody thinks that they're going to hit a home run. Probably because of Meta and Facebook kind of in sympathy. But they're up significantly. So Meta, I mean, sorry, it's a 52-week high. I mean, Amazon has to deliver good earnings. And it's a reflection of state of consumer. Right now, this is more of a technology companies, Microsoft, Google, Meta. Now you're going to have, well, Meta is not, but Amazon and, well, Google, right, they're more kind of advertising technology. Amazon and Apple is state of consumer, you know. How many people are willing to pay $1,000 for their iPhone? How many people are willing to pay whatever they're paying, $100 for their Amazon membership? Okay. All right, so let's review the rest of the positions. So LA Lilly, I have an order to close at 402. I would buy, yeah, but I mean, I'm a little concerned about healthcare, right? We had a pretty sharp pullback. Right, this is a pretty sharp pullback. I mean, obviously there are exceptions like LA Lilly, but again, I don't believe in divergences that last too long. So Eli Lilly, you have to be careful. Small position because you long-term think this is a miracle drug that they have for diabetes and weight loss. That's kind of my idea. Okay, then you can have small position because you think it's gonna, outsmart the market. But I would not have a lot of these positions. All right, so that's Eli Lilly. Okay, Google. Yeah, I'm out of Google. Russell 2000, again, one of the main bear arguments is that semiconductors are rolling over. Russell 2000 rolling over. They're usually forward-looking indicators for what to expect shortly. Small position, and Lilly. NOC was up. I think they delivered kind of mixed results. I think they beat the revenue, but EPS was down. So they were up maybe 2%. Now they're only up 1%. But at least I think it's stable. So it should. We'll see what it trades. Partly, I think it's because of industrials had a sharp pullback. So you have a kind of, again, even though like LMT had strong earnings and beat, had a good earnings and actually tried to break out of this 52-week high, it got pulled back, and I think mainly because of the market conditions, right? So I'll still have a small position similar to Eli Lilly. I think there is another theme going on that can outsmart the market trends. So small position LLY, small position NOC. May bearish. I have bearish May puts call spread. I reduced the size, close half of it. And June, I have bearish June position. June, we'll see. I still think we can reach close to 290 by June, right? Once Apple announces earnings, what else are you going to look forward to, right? There's nothing really to look forward to, and there's nothing really to look forward to for the bulls. They're going to start abandoning their positions. So I think June, September, I'm bearish in QQQ. If you're uncomfortable trading options to hedge your position, and you only have 4 positions, I suggest right now, if you were a bull and you had 3 bullish and 1 bearish, last week, I would suggest maybe have 2 bullish, 2 bearish positions right now. If you were bearish last week and you had 2 bullish, 2 bearish, this is the time to have 3 bearish, 1 bullish, right? Get a little bit more bearish because market is losing momentum. So FH, right? You can hedge your portfolio with SH. You can hedge your portfolio with TLT, Treasury, right? Recession, deflation, both scenarios, Treasury should continue going higher, and interest rates should go lower. So NTLT. I'm out of Verizon earnings, and then XLF, bearish XLF, right? Banks are another reason, bear argument is that in recession, usually banks don't do well, and you can see kind of familiar pattern, right? A kind of a classical, we've seen this many times, especially in the bear market. A 50% retracement, JP Morgan, Bank of America, Wells Fargo, and then C, right? Going into summer, I think it's just a matter of time to break through these support levels. All right, so that's XLF. Any other questions? So when it went over earnings, it's 9:02. Let's see. Meanwhile, today, let's see. Initial claims were a little bit better, which is good. I think that's positive for the market. I think GDP was a little bit worse. Some components were better. You have to drill into it, but I think it was a little bit worse. GDP, Q1 GDP was a little bit worse. Initial claims were a little bit better, right? I think 245, which is, good. So as a result, right, interest rates are up, right? I think there is a pricing component, so still signs of kind of inflation, right? And we know that when interest rates are higher, it's just a matter of QQQ to roll over, and you can see semiconductors already rolling over. So QQQ reacting to Meta earnings, it's not going to last too long, this divergence. So higher interest rates, I'm sorry, high interest rates is good, right? So high inflation, high interest rates, that mean QQQ is up, right? That's the new recessionary trade. People sell on TLT and they buy in Meta, right? So that's the right relationship, right? The reason the rates are higher because some of the components of GDP, you can still see strong consumers spending a lot. That means rates higher for longer, right? Higher for longer, and for now, this is the relationship, right? If rates are high, then we don't have a recession, right? That's kind of the idea. Strong consumer, the correlation is different than what it was before March, right? Before March. So for high rates is good for bulls, right? And 10 years sitting at this, we talked about 3.5%, right? It's kind of knocking on the door of this 3.3%. It did it since January, right? Since January, or you can say even since June of last year. So for the past 12 months, rates didn't go anywhere, right? 10-year yield was the same as it was 12 months ago, even though, rates are much higher. So it's a key support. I would watch that level. As long as we didn't break this level, we're going to have this consolidation. And VIX is at 17, right? So people are still not convinced and they're not hedging. What's up with XOP today, in my opinion? Again, fear of recession. Fear of recession, crude oil, right? Even though they're cutting down the supplies, it already closed the gap and actually lower, right? So crude oil is selling off, XOPs are selling off. Fear of recession, right? Because if there is a recession, it's, oil prices should not be at 80, 70. They should be, 40, 60, right? That's usually what happens during recession. So I think right now, if you have more evidence that, we're heading into recession, then that is the explanation, why. And the biggest thing is, across the board, right, you have value stocks significantly pull back, right? We basically undid 3, even 4 weeks, right? 4 weeks ago, we closed at this 137 level. We pierced through it, right? So next week has to be a good, strong week. If we have another red candlestick on Friday, right, when we meet next Friday and we have another red candlestick, all that means is that the sell-off is going to start accelerating. If not, then, we can, May could be a couple more weeks of this up and down action. Everybody's waiting for Amazon and Apple, right? Right, that's I think the last man standing. Any question? All right. Meanwhile, let's see what else is interesting. Meta continued to trade higher, up 15%. eBay turned positive, Teladoc turned positive, Roku positive, LUV even rebounding, yay. All right, so Comcast. So it looks like rallies can continue. QQQ up, okay. Look at Comcast. All right, it's 9:08. Any other questions? So all eyes are on Amazon earnings, right? Very important, right? Probably just as important as Google and Microsoft. All right, let's see any questions. JS, welcome. Block Zero, welcome. All right. Fred, any earnings for tonight? Again, we're going to do closing bell, right? We're going to do closing bell. A few announcements. One is please join me on social media, right? On YouTube channel. You can click on subscribe if you haven't done this. We do have morning bell and closing bell, especially during earnings season. I do a lot of earnings. I go over at least all of my personal earnings trades, and we do one in Yellow Tunnel and Elite Service. So if you're Elite subscriber or if you're part of the earnings power trader, then those are the trades. So please join me on YouTube. Today, I mean, Amazon, right, is the #1 candidate. So probably I will do Amazon. Have to see estimated movement if it warrants. But it's been very volatile, right? So I'm a little, you really have to be careful and calculate the estimated move correctly. And see if you want to take that risk, because we've had, where Amazon, well, not this way, but here it had a pretty large gap. It closed 11%, but I think it was down as much as 15%. So you have to be careful with Amazon. But Amazon is announcing earnings tomorrow. Intel, right? So you have Amazon, we have Intel. Those are probably the main candidates. How did MasterCard do? Actually up 1.5%. Okay. Any questions? Are you surprised on the strength of overall earnings? No earnings recession. I still think we have earnings recession, right? Earnings recession means that growth of revenue is negative. And my understanding, we're still in negative earnings growth, right? Meta 3% earnings growth, I mean, it's a borderline, right? So I still think we're trading in earnings recession. I mean, obviously they have been, you would say, more resilient, but again, I think only in technology, right? Value stocks looks like anything outside of value is already pulling back, right? BTV is very weak, right? So you can see even consumer staples are kind of pulling back, right? Consumer staples are pulling back. Healthcare is definitely pulling back. Industrials, semiconductors. So you have earnings recession everywhere except QQQ, right? QQQ still, since October, chugging along, right? But QQQ has been extremely weak prior, right? This is the first rally in the past 18 months led by technology, right? I mean, August had a strong rally, right? August. No, I think so. August, we had a strong rally in, from June lows, right? But then it was underperforming value stocks. Now it's outperforming value stocks. But I think it's only because, we still have soft landing narrative. As long as the soft landing narrative is going to be put aside, then, you probably won't be able to hide in technology names. All right. Anything else? All right, it's 9:15. Thank you very much. We do have on Yellow Tunnel, we do have a webinar. Please join me today at 12 p.m. Central. We talked about YouTube. So 12 p.m. Central on Yellow Tunnel, free. You can join me. And, we're talking about risk management. We'll talk about portfolio allocation, trading psychology. So Yellow Tunnel, it's a free account, and you can join me at 12 p.m. Central. On YouTube, Monday and Wednesday, live trading is broadcasted. So please join me on YouTube. Yellow Tunnel, and then what else? And then if you are interested in the saving money on commissions, right, especially earnings, very commission-intensive strategy. And commissions are low, but you're still paying usually $1 a contract, right? So even if you're paying $1 a contract, it adds up. So this is a Tradier. I know these guys. This is from King Trade and several brokerages firms. So here, I mean, if you're not active trader, you pay $10 a month maximum, right? So $10 a month. This is 10 contracts. So in theory, if you do more than 10 contracts a month, right? One earnings is 4 contracts to get in, 4 contracts to get out. So that's $8. So if you do more than one iron condor, you can save money, right? And depending on how active you are, you can save a lot of money. So if you're interested in saving a lot of money, then I'm going to put that link and see if you guys can join. We already have a few subscribers joining, and so far I'm getting positive feedback. They are saving a lot of money. This is some calculation depending how many contracts you do a year. But you can get earnings power trader, and you can get discount on your option trades. Bob. Okay, Bob is using Tradier. Thank you, Bob. So we do have few people using. Consider opening up an account, and yes, you can save a lot of money. All right, that's all I have for today. You guys have been awesome. Thank you very much, and I'll see you hopefully at 12 o'clock Chicago time, 1 o'clock New York for the Yellow Tunnel presentation. If not, then closing bell. Thank you. Tradier, Discord guys, thank you very much. Faust, thank you. Take care.